Welcome back. Today we're discussing a development in the silver market that many investors are overlooking, but they may not be able to ignore much longer. The signals coming from supply, demand, central bank policies, and industrial consumption are creating a situation that could reshape the silver market faster than most people expect. The question isn't whether silver remains an important asset. The real question is whether investors are prepared for what could happen next. History has shown that silver can stay quiet for extended periods and then move with incredible speed when market conditions align. In this presentation, we'll examine the warning signs, the market forces driving the current environment, and the reasons many seasoned investors are paying close attention right now. If you're serious about protecting purchasing power, building long-term wealth, and understanding where opportunities may emerge, this discussion could be one of the most important you hear this year. When most investors think about silver, they focus almost entirely on price. They watch the charts, follow the headlines, and try to predict whether the metal will move up or down in the coming weeks. What often gets overlooked is the foundation that ultimately drives long-term value supply. And right now, beneath the surface of the market, a supply situation is developing that deserves far more attention than it is receiving. The silver market has always operated differently from many other commodities. Unlike products that can be quickly manufactured to meet rising demand, silver must be discovered, extracted, refined, transported, and delivered through a lengthy process that requires significant investment, time, and infrastructure. This process cannot be accelerated overnight. When shortages begin to emerge, the market often realizes the problem much later than the people working closest to the industry. For years, silver production has faced numerous challenges. Mining companies have dealt with rising operational costs, stricter regulations, declining ore grades, labor shortages, energy price fluctuations, and increasing geopolitical uncertainty. Each of these factors individually creates pressure on supply. Combined, they form a situation that becomes increasingly difficult to ignore. One of the most important realities many investors fail to understand is that a large percentage of the world's silver production does not come from mines dedicated primarily to silver. Instead, silver is often produced as a byproduct of mining operations focused on other metals such as copper, zinc, lead, and gold. This means that silver production is frequently dependent on decisions being made for entirely different commodities. If a copper producer decides to reduce operations because copper prices weaken, silver output may decline as well, even if silver demand remains strong. If a zinc mine closes due to profitability concerns, silver production can fall regardless of conditions within the silver market itself. This creates a unique challenge because silver supply cannot always respond directly to changes in silver demand. At the same time, many of the world's major silver-producing regions have experienced growing economic and political uncertainty. Mining projects often require years of planning, permitting, financing, and construction before a single ounce reaches the market. Any disruption during this process can delay production significantly. Political instability, regulatory changes, environmental restrictions, taxation concerns, and local opposition can all slow the development of new projects. The result is that bringing new silver supply online has become increasingly difficult. Investors sometimes assume that higher prices will automatically solve shortages because producers will simply mine more metal. In reality, the mining industry operates on timelines measured in years rather than weeks or months. Even if silver prices were to rise dramatically, significant new production could take a very long time to arrive. Another issue receiving insufficient attention is the declining quality of ore being extracted from many mining operations. As higher-grade deposits become depleted, miners are often forced to process larger amounts of material to recover the same quantity of silver. This increases costs, requires more energy, consumes additional resources, and places greater pressure on profitability. Mining companies face a difficult balancing act. They must invest heavily today for production that may not materialize until years into the future. Investors, meanwhile, often demand short-term returns. This mismatch can discourage the large-scale investments necessary to expand future supply. The consequences become particularly important when demand remains stable or begins to grow. A market does not require a complete exhaustion of supply to experience significant price movements. Even modest imbalances between available metal and market demand can create powerful effects. The silver market is relatively small compared to many global financial markets, meaning that changes in physical availability can have outsized consequences. What makes the current situation especially noteworthy is that supply challenges are emerging at a time when silver's role in the global economy continues to expand. Silver is not merely a precious metal held for investment purposes. It is also an industrial metal with applications across a wide range of technologies and manufacturing processes. Its exceptional conductivity, reflectivity, and antibacterial properties make it difficult to replace in many critical applications. Modern industries rely on silver in ways that many consumers never realize. Electronics, medical devices, communication systems, automotive technologies, renewable energy infrastructure, and countless industrial products depend on silver's unique characteristics. Unlike gold, which is often stored and preserved, significant amounts of silver are consumed during industrial use. In many cases, recovering that silver is either uneconomical or impractical. Small quantities become dispersed across millions of products around the world. Once used, much of that metal effectively leaves the readily available supply chain. This dynamic creates an important distinction. While silver continues to be mined, substantial quantities are simultaneously being consumed by industry. Over time, this can tighten the balance between production and demand. Investors frequently underestimate how quickly perceptions can change when physical availability becomes a concern. Markets often remain complacent until tangible evidence appears. Then sentiment can shift rapidly. Participants who previously ignored supply fundamentals suddenly begin competing for the same limited resources. History provides numerous examples of commodity markets reacting aggressively when shortages emerge. The transition from apparent abundance to recognized scarcity can occur much faster than most people anticipate. Prices often move not because supply has disappeared entirely, but because confidence in future availability begins to weaken. Another factor contributing to current concerns is the limited amount of investment capital flowing into exploration. Discovering new mineral deposits is expensive, uncertain, and time-consuming. Exploration companies face significant challenges raising funds, especially during periods when commodity prices remain subdued. Without adequate exploration, future production pipelines become increasingly constrained. The mines supplying the market tomorrow must be discovered and developed today. When exploration activity falls, the long-term implications may not become apparent until years later. Many experienced industry observers pay close attention to this relationship between exploration spending and future supply. They understand that shortages rarely emerge suddenly. Instead, they develop gradually beneath the surface, often unnoticed by the broader market, until conditions become difficult to reverse. The supply chain itself has also become more complex. Global logistics networks remain vulnerable to disruptions caused by geopolitical tensions, transportation bottlenecks, labor disputes, natural disasters, and shifting trade relationships. Even when silver is successfully mined and refined, delivering it efficiently to end users can present challenges. These logistical pressures add another layer of uncertainty. Markets function best when supply chains operate smoothly. When disruptions occur, inventories can tighten unexpectedly, creating localized shortages and increasing volatility. Physical silver inventories deserve particular attention. Investors often assume that reported inventories represent unlimited availability. However, not all stored silver is immediately accessible to the market. Some inventories may be committed to industrial users, tied to contractual obligations, held as strategic reserves, or owned by investors unwilling to sell at current prices. As a result, the amount of silver theoretically available may differ significantly from the quantity actually circulating within the market. During periods of rising demand, this distinction becomes increasingly important. Investor behavior can further amplify supply pressures. When confidence in financial markets weakens, many individuals seek tangible assets. Precious metals have historically attracted attention during periods of inflation, currency uncertainty, economic instability, and financial stress. If investment demand increases while industrial demand remains strong, competition for available metal intensifies. Since silver markets are relatively small compared to stocks, bonds, and currencies, even modest shifts in capital allocation can produce significant effects. The psychology surrounding supply shortages is often as influential as the shortages themselves. Markets respond not only to current conditions but also to expectations about the future. If participants begin believing that silver will become harder to obtain, purchasing behavior can accelerate. Buyers who might otherwise wait decide to act immediately. This surge in demand places additional pressure on existing inventories. Meanwhile, sellers may become more reluctant to part with their holdings. The perception of scarcity encourages hoarding behavior, reducing available supply even further. This feedback loop can develop quickly once confidence begins to shift. Many investors focus exclusively on headline production numbers without considering broader trends. Annual production statistics provide useful information, but they do not tell the entire story. Understanding supply requires examining mine development pipelines, exploration activity, ore quality trends, geopolitical risks, energy costs, regulatory environments, and industrial consumption patterns simultaneously. Viewed through this broader lens, the silver market appears increasingly vulnerable to supply constraints. None of these factors alone guarantees a shortage. However, their combined influence creates conditions that deserve careful attention. The market's tendency to underestimate supply risk stems partly from human nature. People often assume that essential resources will always be available because they have been available in the past. Yet history repeatedly demonstrates that supply dynamics can change. Commodities once considered abundant can become scarce when production struggles to keep pace with demand. Silver occupies a unique position because it serves both monetary and industrial functions. This dual role means that demand can originate from multiple sources simultaneously. Industrial users require silver regardless of investor sentiment, while investors may seek silver precisely when economic uncertainty increases. This combination creates a potentially powerful dynamic. Industrial demand establishes a baseline level of consumption, while investment demand can fluctuate dramatically depending on market conditions. When both sources of demand strengthen together, pressure on supply becomes more pronounced. Some market participants believe technological innovation will eventually reduce silver usage. While substitutions may occur in certain applications, many industries continue relying on silver because of its unmatched properties. In numerous cases, replacing silver involves performance trade-offs that manufacturers are unwilling to accept. As technology advances, entirely new applications for silver continue emerging. Innovations in energy systems, electronics, medical technologies, and advanced manufacturing frequently create additional sources of demand. This ongoing evolution complicates efforts to forecast future consumption. The hidden supply crisis is not necessarily about an immediate absence of silver. Rather, it concerns the growing gap between what the market assumes is available and what may actually be accessible under changing conditions. Markets often function smoothly until stress tests expose underlying vulnerabilities. Those vulnerabilities become increasingly important when inventories decline, production growth slows, industrial demand expands, exploration investment remains limited, and geopolitical risks continue rising. Individually, each factor warrants observation. Together, they form a picture that deserves serious consideration from anyone monitoring the future of the silver market. Experienced investors understand that opportunities often emerge before consensus recognizes a developing trend. By the time shortages become front-page news, significant market adjustments may already have occurred. Understanding supply fundamentals allows investors to evaluate conditions based on underlying realities rather than short-term headlines. The silver market has historically rewarded those willing to look beyond daily price fluctuations and examine the structural forces shaping long-term supply and demand. Today, those structural forces suggest that supply constraints are becoming increasingly relevant. Whether the broader market recognizes these pressures now or later, the underlying dynamics continue to evolve beneath the surface, influencing availability, inventory levels, production decisions, industrial consumption patterns, investment behavior, and overall market expectations. One of the most powerful forces shaping the future of the silver market is not investor demand, economic uncertainty, or even central bank policy. it is industrial demand. While many people still think of silver primarily as a precious metal held for wealth preservation, the reality is that silver has become an increasingly critical component of modern industry. The world is entering a period where technological advancement, energy transformation, and industrial expansion are driving unprecedented demand for silver, creating conditions that many investors have yet to fully appreciate. Silver possesses a combination of physical properties that make it uniquely valuable. It is the most electrically conductive metal known to science. It is also the most thermally conductive and one of the most reflective metals available. These characteristics allow silver to perform functions that are difficult and in many cases impossible to replicate effectively with alternative materials. As industries continue to evolve and technologies become more sophisticated, these properties become even more important. For decades, industrial demand has represented a significant portion of total silver consumption. However, the scale and diversity of modern applications have expanded dramatically. Silver is now embedded in technologies that power communication networks, transportation systems, healthcare equipment, renewable energy infrastructure, advanced electronics, and countless consumer products used every day around the world. The electronics sector alone demonstrates the critical importance of silver. Nearly every modern electronic device contains silver in some form. Smartphones, laptops, tablets, televisions, gaming systems, servers, networking equipment, and industrial control systems all rely on silver's superior conductivity. Tiny amounts may be used in individual devices, but when multiplied across billions of units produced annually, the cumulative demand becomes enormous. As global populations continue adopting technology at unprecedented rates, the demand for electronic products remains strong. Emerging economies are bringing millions of new consumers into the digital marketplace each year. At the same time, developed economies continue upgrading devices, expanding data infrastructure, and increasing reliance on connected technologies. The rise of artificial intelligence is adding another dimension to this trend. Advanced computing systems require massive data centers equipped with sophisticated hardware. These facilities depend on high-performance electrical components, many of which utilize silver. As AI applications become more widespread, the infrastructure supporting them continues expanding, contributing to industrial demand growth. Telecommunications networks provide another major source of silver consumption. Modern communication systems rely on highly efficient conductive materials to ensure reliability and performance. The global rollout of advanced wireless technologies requires extensive infrastructure investment, including antennas, transmitters, receivers, circuit boards, and networking equipment that incorporate silver. The automotive industry represents one of the fastest growing areas of silver demand. Modern vehicles contain significantly more electronics than previous generations. Advanced safety systems, navigation technologies, infotainment platforms, sensors, cameras, connectivity features, and power management systems all contribute to rising silver usage. Electric vehicles are particularly important in this discussion. As transportation undergoes a historic transformation, electric vehicle production continues increasing across major markets worldwide. Electric vehicles typically require substantially more silver than traditional internal combustion vehicles due to their complex electrical systems and power management requirements. Every electric vehicle contains numerous components that depend on silver. Battery management systems, charging infrastructure, power electronics, control units, sensors, and advanced circuitry all contribute to higher silver consumption. As governments and manufacturers invest heavily in transportation electrification, this trend is expected to remain a significant driver of industrial demand. Charging infrastructure further amplifies the impact. Building a global network capable of supporting millions of electric vehicles requires extensive investment in electrical systems, power distribution equipment, and charging stations. Many of these applications rely on silver-containing components to ensure efficiency and reliability. Perhaps no industrial sector illustrates silver's growing importance more clearly than renewable energy. The transition toward cleaner energy sources has become a major global priority. Governments, corporations, and consumers are investing billions of dollars in renewable technologies designed to reduce dependence on fossil fuels and lower carbon emissions. Solar energy stands at the center of this transformation. Silver plays a crucial role in photovoltaic solar panels because of its exceptional conductivity. Specialized silver pastes are used to create electrical pathways that allow solar cells to convert sunlight into usable electricity. Without silver, many solar technologies would experience significant performance limitations. As solar installations continue expanding around the world, silver demand from the renewable energy sector has increased substantially. Countries across multiple continents are pursuing ambitious renewable energy targets. Utility-scale solar projects, commercial installations, and residential systems are all contributing to growing consumption. The scale of planned solar expansion is difficult to overstate. Governments have announced long-term strategies involving massive investments in renewable infrastructure. Energy companies are allocating significant capital towards solar development. Businesses are adopting sustainability initiatives that include renewable power generation. Homeowners are increasingly installing rooftop systems. Each new solar panel added to the global energy network represents additional silver demand. When multiplied across millions of installations, the impact becomes significant. This demand is not driven by speculation or investor sentiment. It is driven by physical construction and technological deployment. Medical applications provide another important source of industrial demand. Silver possesses natural antimicrobial properties that make it valuable in healthcare environments. Medical devices, wound dressings, surgical instruments, coatings, and infection control technologies often utilize silver to help prevent bacterial growth and improve patient outcomes. As healthcare systems expand and populations age, demand for advanced medical technologies continues increasing. Silver's unique characteristics ensure that it remains an important component in numerous healthcare applications. Technological innovation within the medical sector may create additional uses over time. Water purification represents another growing area of interest. Silver's antibacterial properties make it useful in filtration systems and water treatment technologies. As concerns regarding clean water access increase globally, demand for effective purification solutions continues expanding. Industrial automation is also contributing to silver consumption growth. Manufacturing facilities around the world are becoming increasingly automated. Robotics, sensors, control systems, monitoring equipment, and smart factory technologies rely heavily on electronic components that incorporate silver. The concept of the Internet of Things has accelerated this trend. Connected devices are being integrated into homes, businesses, transportation systems, industrial facilities, and public infrastructure. Each connected device requires electronic circuitry, and many of those circuits contain silver. Data generation and processing requirements continue rising as connectivity expands. The infrastructure necessary to support this digital transformation includes servers, storage systems, networking equipment, and communication technologies that contribute to ongoing silver demand. Defense and aerospace industries also rely on silver for numerous specialized applications. High-performance electronics communication systems, guidance technologies, satellite components, and advanced military equipment frequently utilize silver because of its reliability and efficiency under demanding conditions. As geopolitical tensions influence defense spending priorities, investment in advanced technologies remains significant. Many of these technologies require materials capable of meeting strict performance standards, reinforcing silver's importance within the sector. One of the most important aspects of industrial silver demand is that it is often relatively insensitive to short-term price fluctuations. Manufacturers prioritize reliability, performance, and product functionality. In many cases, the amount of silver used in a specific product represents only a small portion of total production costs. As a result, even substantial increases in silver prices may have limited impact on overall manufacturing economics. Companies are often willing to absorb higher silver costs rather than compromise product quality or performance. This dynamic helps support demand even during periods of market volatility. Another factor worth considering is the challenge of substitution. While researchers continuously explore alternative materials, replacing silver is not always practical. Many